If you think AI is making your company more productive, you're right, but it may also be quietly creating one of the biggest security blind spots your organization has ever faced. Today, we're breaking down the top 10 takeaways from SailPoint's Q1 2027 earnings call and what they reveal about the future of identity security in the age of AI agents. Stay with us, because number 1 is the kind of platform shift that only happens once in a generation. Coming in at number 10, regulatory tailwinds are becoming a serious force. The EU AI Act and new US frameworks from the Treasury and NIST are no longer theoretical. They are pushing enterprises towards strict, auditable controls over non-human identities and their relationship to a human owner. For SailPoint, this is a tailwind that plays directly into their platform's core strengths. At number 9, SailPoint announced a notable integration with Anthropic's Claude. Enterprises using Claude AI agents can now manage those agents under SailPoint's governance framework alongside their human identities. This move directly targets the growing problem of shadow AI and unmanaged agent privileges operating outside IT's line of sight. Number 8 highlights a powerful competitive win. A major North American retailer, following a costly breach tied to poor visibility into machine and agent identities, signed a 5-year commitment to SailPoint. Working with Deloitte, SailPoint displaced a competitor and now centrally governs both human and non-human identities across the retailer's entire environment. At number 7, SailPoint introduced a new hybrid consumption pricing model. Each human identity license now includes a baseline of non-human identities, like AI agents and bots, at no extra charge up to a certain ratio. As usage grows, customers can add capacity packs. This removes a key friction point that was slowing enterprise adoption of agentic solutions. Number 6 is about the money. SailPoint raised its full-year guidance, lifting ARR to $1.369 billion, revenue to approximately $1.27 billion, and adjusted operating margin to 19%. The company also expects to generate around $200 million in free cash flow for the year, reflecting consistent profitable growth at scale. Number 5 is one that investors should watch closely. SailPoint's agentic sales pipeline doubled in Q1. That revenue hasn't fully shown up in the financials yet, but management was clear. They see significant momentum building, and they expect it to start showing up in the numbers as customer workshops accelerate top-of-funnel conversion. Number 4 covers the headline Q1 financial results. ARR reached $1.163 billion, up 26% year-over-year. Revenue came in at $280 million, a 22% increase. SaaS ARR specifically grew 36%, and the company generated $33 million in free cash flow. Every key metric came in above the high end of guidance. At number 3, the SaaS migration engine is firing on all cylinders. Migration ARR more than doubled year-over-year, and SaaS now accounts for 92% of net new ARR in the quarter, compared to just 69% a year ago. The Navigator's Flex pricing program is a key driver, with roughly 1/3 of migrations leveraging that flexible modernization structure. Number 2 shows that SailPoint's newer products are gaining serious traction. Emerging products, driven by non-human identity, non-employee risk management, and new AI offerings, now represent 20% of net new ARR in Q1, more than doubling year-over-year. This is a clear signal that the platform is expanding beyond its core governance roots. And the number 1 takeaway from this earnings call, the launch of SailPoint Agentic Fabric. This new platform layer is designed to discover and govern AI agents in real time, across any cloud, any hyperscaler, and even on-premise environments, assigning every agent to an accountable human owner and enforcing least privilege access at machine speed. With integrations into AWS Bedrock, Salesforce, Snowflake, and CrowdStrike, Agentic Fabric positions SailPoint as the identity control plane for the agentic enterprise. This is the big bet, and based on everything in this earnings call, the market is starting to take notice. If you found this helpful, don't forget to subscribe for more earnings analysis from Earnings Central.